Yo, what is good, everybody? I hope you all had a fantastic trading day today. As you can see, I'm back in school. I'm going to be going back to one video a week on those Sundays. Just got so much schoolwork and everything. It's going to be too much to balance, so we're going to be going back to that. But other than that, talking about the markets today, not really too much happened today, but it did give us some clues for what can happen on later this week. So that's what we're going to be talking about in today's video. We're just going to get into it. Make sure to show the video some love, give it a like, and subscribe. Let's get into it. So to start off here, as usual, we'll starting out with oil here. So oil, I've been kind of looking to short this, but it's really been not really giving me too much to work with here. You can see we're kind of trading sideways now. There's that possibility we were going to make that one more high, which was kind of what I wanted to see right here. And if that was the case, it would have been an easy short, or a safe short, I guess I should say, because it could have stopped here. It could have stopped before this high and then dropped. But, then if you take that short position and it goes higher, you're in the red, you got to average up or average down or whatever. So I wanted to see that one more high for that safe short. We did not get that, and instead we went sideways, and we're just in this like awkward kind of channel here. So it's a little tricky. I've been wanting to short this, but I'm not really sure what I want to do. What I would prefer to see is we jump back up, get back into this range. If you've been following my channel for a while, I really like to target these areas of illiquidity. So as you can see, we shoot right through this region. Price tends to revert back to that area to kind of fill that area, just kind of test what buyers and sellers are going to do there. So if we do get that bounce back up, I would probably be targeting to short up here, but now it's just a little awkward just because if I short here, I feel like I'm chasing and it could bounce here, but I could also miss more of a drop. So I've been targeting this the lower 70s region, even all the way down at 72, but you'd have to break a pretty big support. So interesting spot here. Unfortunate that it didn't really give us much to work with here, except it did give us these really clear divergences. So that was pretty obvious, but as I was talking about, with these divergences, they can do this thing where there's a divergence, but it goes for one more high and then drops. So that's what I was kind of looking out for, and it almost did that twice, but couldn't do it. Broke under this somewhat channel structure, so it's a little tricky. We'll see if it can reclaim this line, but if it can't, I would expect some downside, just to let these divergences play out. So natural gas here, big spot coming up really the next 2 weeks, I'd say. This area here is, if you know what Hurst theory is, cycle analysis, this is when it's projected to bottom. So it has been relentlessly dropping for over a month now. It's absurd, but we're going into a phase where it is likely to bottom. Now, I'm not saying it will bottom. I wish I could. Normally, I would say I think this is gonna bottom just because nothing falls forever, nothing goes up forever. But this is absurd. It just breaks every single support without a problem. So it's entering a period of where it should bottom and enter into a bullish cycle for several weeks. But I would like to see it bottom first and stop falling for once before I can really feel confident in saying that it should bottom. So entering a phase where it should bottom and start moving up, but I would like to have some clarification. So the US dollar here, we said this would go up. I said I'm bullish until it breaks this line, which it probably wouldn't. And we got that breakout to the upside. It's a wedge. Now it's just kind of a question of how high can this go. You can kind of see it's going to have some trouble in this region as there's a lot of congestion in this area. So we can get above this area. You got this wick to deal with, which it's definitely going to be met with sellers. But above that, there's a lot of room to go up here. Just looking at areas of illiquidity, I can see 105 being tested. But really the main thing I've been talking about is we have to hold this low, just this region, or we're going to come down here and test 99, that 99.50 level to 97.80, whatever this is. So we'll see if this low holds. We got that breakout of the wedge. We'll see if it continues. Apple. So we've been talking about this We've been bullish since it was down here with that kind of wedging structure, with those divergences where the MACD and the RSI were going up while the price was going down, and that was really telling us this thing's gonna reverse soon, and that's what it did. We got these 5 waves up here. And I was talking about how it should probably pull back soon, but it doesn't have to because this is a major breakout. It's been consolidating and it's been stuck in this pattern since October now. It's technically like August, but it really started getting rejected and creating this trend line starting in August. So that's why I'm saying August rather than October rather than August. So got that breakout. It's just been continuing. I'm looking for where these 5 waves are kind of being built, and what you can use to your advantage to know when it's in a 5th wave is divergences. The 5th wave tends to create a divergence, so a lower high on the RSI and MACD, and that's what you're getting. So from here, if this is the end of the 5th wave, we will be going to 135, 135 80s, 135 80s to 132.30. So at the 50% to that golden pocket range. So we'll look to see if that top holds. Maybe we come back for that gap. Maybe it wants to do some tricking, wants to pull some tricks. We'll see. But what I would like to see to confirm this move down is probably a little more wave structure. So like a clear 5 waves down, and then we would look for a bounce, which would be your ABC, and then you get another 5 waves down, right into that target range. So, yeah, that would probably take a couple days to play out, maybe a week or so. We'll just have to see what it does up at these levels. Tesla, I said it would get rejected here, or I said it would get rejected anywhere from around 180 to 230. Now, I didn't think it would get to 230 or 220 just because that's crazy. Or it not necessarily crazy, but it's just it doesn't look right. That doesn't really make sense. So I was saying it can start getting rejected anywhere starting at 180, and we got rejected at 180. So that's because of this volume gap. There's just you need momentum to get through a volume gap and continue into what's going to be this supply zone in the shape of a bell curve. So if you've been watching my channel, I talk about this a lot. So when you're in a volume node that's in the shape of a bell curve, traders take positions in the middle. Whether they're taking a short position, they distribute it as you go out into the farther deviations of this range, and same thing with long positions. So now that you're pushing into it, it's just going to be met with sellers all in this region here. So that's why I said sellers will start to come in starting at 180 all the way up to 30 to 20. So got a harsh rejection in that volume gap. You can come all the way back to the bottom of it. The big support, the big level really is going to be this region, which is going to be 140s, the 140s, low 140s. Amazon, we were talking about that bull flag, which we would probably get continuation. We got that bull flag, and if you go back to my last video, I was talking about how it's consolidating in this flagging formation. So we got that breakout. And where did this get rejected from? Right at the top of this, I guess this trading range here. So you can see I'm going to add a little, I want to add some more of these. So we can really have some more bars to work with. Did it work? Oh, wait, I did it on the wrong one side. So give me a second. So you can see this is really where this trading range or volume node ends, and that's where you got rejected. If you break out of this, there's not, it's going to create a new trading range. It's going to go into kind of a different, I guess, space is a way you could put it. It's just, this is a trading range, and once you break out of this, it's going into a new region, new range of trading, where kind of the dynamics will be a little different. So that level is going to be pretty much where it got rejected at 103 level. So we'll see if it can break above that. If it does, we've been targeting this gap since December. So we're finally here. We're getting really close now. there's not really too much to say. This is what we've been expecting, doing exactly as we said it would do. So, LabVIEW, very interesting spot here. I said I'm looking for this line to get broken. Now, the way I previously had it drawn was like this, and now in hindsight, it's kind of looking more like this, as you can kind of see. It that had a reaction. So once this line breaks, it's probably going to continue down, and at least test 660. So how can you make money off of that? So the inverse of this is LabD. Now LabD is already moving up. This is at a resistance as well. So I guess it's kind of a rough range here. It's not exactly the cleanest chart. So it's a little tricky how to like draw these lines, but I think you get what I'm saying here. You can see there's some sort of trend line around this area that it's getting rejected at. So, once LabVIEW breaks, you should see some upside on LabD. And the main ETF that these move off of is XBI, the biotech ETF. We've been talking about how we're just going to kind of watch what it does up in this region. It's been forming these divergences. So we'll take a look at the higher time frames as well. Same thing. Got divergences forming. So it's looking ready to drop a bit. Yeah, I would be put this trend line on your charts. Once this breaks, it should get a nice move down. Yeah, it should get a pretty nice move down. I could see definitely back into this range where you can kind of see a lot of consolidation, just kind of range trading. And that's going to give LabD a relatively decent move up. We were talking about this in my last video. I believe it was sitting, I forget where the price was, but we were talking about how just to move back up to really kind of the bottom of that range is like 20%. So it's getting its move up now. Not too much else to say besides that. Keep it on watch, LabD. Semiconductors. So we've been tracking this pretty well. Very kind of irrational moves here. Not necessarily irrational, but just really putting up a fight here, I guess is the way you could put it. So it has a lot of gaps, which is really another way you can actually play this. It loves to fill its gaps. It's pretty consistent with that, as you can see. Just take a look for yourself. It fills these gaps pretty consistently. But the bigger they are, I guess the more prominent they are in kind of the price history. Like if they're at the beginning of, let me find an example. So this is a pretty prominent gap. As you can see, it kind of started this big spark to the upside, whereas this is just kind of, it didn't really do much after this. So these are what I would say are prominent gaps right here. This one is not completely filled, same with this one. So these are going to get filled in the future. I'm just not sure when. The ETF to play that is SOXS, and we've been looking for some upside on this soon. So it's all kind of lining up here. You've had these disgusting divergences forming while the price has been going lower. MACD is making lower highs, RSI is making lower highs. You got gaps above, gap, gap. So you have a lot of gaps that will very likely get filled in the future, considering this is the bear ETF, bear leverage ETF, and the market should be making a move down soon. So that's what we're going to talk about very soon. So SOXS, I think we're looking at some more upside here, but if it doesn't, I think it could be trading sideways down here. It doesn't really look like it wants to make like this kind of like accelerated downward price action, because the market, which we're going to talk about, it's been pretty explosive lately. This is the SPY futures, so you can really see it's been kind of exploding to the upside, and this hasn't really done that. It's been going down, but not at such an accelerated pace as those really the overall market. So it's a little interesting. It's kind of conflicting. So if it doesn't move up, in my opinion, I think it will just do a slow drift downwards or maybe even sideways. So keep an eye on this one. I think it has some upside in store in the coming weeks and months. So we'll be coming back to this right now. It's sitting at 25.50. We're going to see where it is in a couple weeks. VIX here, we've been talking about that gap. Very likely to get filled. There's really no other, I guess, standing factor that stood out to me that would act as a incentive for the price to get to. This was the main incentive I saw, and we got there. So now the main incentive is this gap here. We broke out of this line, but I think the main incentive is going to be filling that gap, so we'll keep that gap on watch, kind of see how it reacts around that. On to SPY now. So, very interesting. So we've been tracking this upside move for quite a while. You can just look at my thumbnails. I've been bullish. I've really called out. I've been calling for this melt up, and it's been a melt up, but the melt up that I think could happen, this is not it. The melt up I'm talking about is like to 440 on SPY, just growing every single day, like August last year, which that definitely caused some pain. So I think the first thing I want to show here is this wedge. This wedge here is kind of what was intact today, and it was kind of what I expected it to do, where you break out of this top line, but wedges, they very, very rarely break out in the opposite direction that they should break out of. So this is a rising wedge. Normally you see it trade inside of it. I'm just going to kind of illustrate it. So it trades inside of this, and then it breaks down, and it retraces to these certain levels within a range. So let's say the top was right here, that blue line. It retraces to the 0.382 all the way down to the golden pocket, anything under that, and it starts to lean more towards the probability of just continuing to sell off. So it looks like a pretty obvious wedge to me. So it's a little tricky here, because the market does not like to make it easy for people to make money. That's pretty obvious. So I actually might try to redraw this line quick, just to see if there's better lines that give me more interaction. So yeah, we'll stick with this one. So anyways, back to what I was saying. You got a gap here, so it could easily do something like fill this gap and then drop, even make another high and then drop. So it's a really confusing spot. So we're gonna zoom back in and just kind of go over what I was looking at today, because this kind of gives us the picture for what I'm looking at over, I guess, the next day or two. So I'm not sure what happened there. So taking a look at this here, we gotta go in even closer. So this is a corrective structure in ABC. If you follow my channel, this is really what I base most of my trading off of, and you have this corrective structure. So today I was targeting this blue region, because this is that fib target I get from taking that target from this high to this low to this high. So I would much rather do this on SPY futures, because it's a little awkward with after hours and pre-market. Sometimes I use it. I usually don't use it, but sometimes I do. And in this case, it was because it just gave me a low here. So you can see this, the A wave has to be like, it has to be the low, and that count wasn't lining up. So regardless, going back to what I was saying, I would like to see my target get hit, which is 139.850ish to 139.60ish. And the way I got that target is by drawing it without extended hours. So I kind of gave it a range, that 100% extension here. Not exactly the way I'd like to do it, but just I kind of have to do it this time. So 3997, that blue range is what I was targeting today, and I think I still am targeting it. Now, zooming out, what does this really mean? So this here is, give me a second to kind of like piece together everything. So this is a smaller degree of these bigger sets of waves. So this, in theory, is the kind of the inside of a third wave of a much bigger move. So this is one, and then you got a nice pullback for wave two, and then you're in the third wave. So within these waves, you need pullbacks, and these pullbacks consist of these ABC structures, which are correctives. So this would be what I believe is, so here, let me do this. So this is an awkward structure. There's a lot of rules within this Elliott wave stuff, so I'm not going to try to explain that, but anyways, this should be wave 4, and then you get your 5th wave to the upside. So there's a lot of ways you can count this because we don't have a lot of partial action to work with this version yet, so this is actually the more likely scenario in my opinion. We're still, yeah, that's what I was actually saying in the beginning. We're still in this 3rd wave, so 3rd wave of this 3rd wave. So 3rd waves are extraordinarily bullish. This is the 3rd wave right here. They just go straight up and they go straight down because you can have these wave developments to the downside. So what I'm trying to say here is either this goes and pushes for another high. We technically haven't really finished that retracement, which I would prefer to see. It doesn't necessarily have to get that low, but it should. But in the case that it doesn't, this thing can go straight up from here. We've already broken out of that bigger trend line, which we were looking for to happen this year. We're talking about a pullback. You can just go look at my thumbnails. You can see it. We were talking about this breakout. Well, first the pullback and then the breakout. But again, it's a race against time. We're entering a period of risk. Again, her cycle, as I was talking about with natural gas, we're entering a major period of risk. So kind of the opposite of what's happening with natural gas while it's going into a bottoming phase. SPY is going into a major topping phase. So a lot of negative momentum is going to come into the picture. And you can kind of negate that effect if it's bullish enough and strong enough, but it's really unlikely in my opinion. So I believe that period started yesterday and it goes all the way out into early April. So it's a very massive range, and it doesn't mean it has to start falling right at the beginning of it, but just during that period, going to kind of draw that time frame, early April, right around 2, this is a period of risk. So it's a major period of risk where you can see a major decline, and I'm talking about going straight to 300. Now, I'm not really sure what the catalyst would be for that, but it's a really interesting spot in the market because I'm bullish. There's a lot of potential for this melt up, which would take us to 420 all the way up to 440, and then you get your move down to 300, which is just, it looks crazy. It really does look crazy, but that's kind of the scenario I'm looking at, but it doesn't have to get up there. If you don't break this high, you can really reject anywhere before that. So right now, we're talking about that smaller supply zone, which we got rejected at on Friday. As you can see, we're going to zoom back in here. That's where we got rejected at, and that was a harsh rejection. Right at the end of the day, if you remember Friday, we sold off really hard. So it's a very tricky spot here, very interesting spot here. You got FOMC coming up. The FOMC meeting, that's on Wednesday. That could give us a pretty big direction. Now, what I think could happen, so for me, looking at these other ETFs that move and follow the market, sometimes these kind of give you a look into the future. If you can tell what these are going to do, you can tell what the overall market's going to do. So considering that this is about to break down, or really just the biotech sector, it's looking ready to break down. I'm almost leaning bearish, but it's really just too hard to say. So because you don't want to be on the wrong side of this move, I'm not going to be betting on it. That's not something I do. I like to play the aftermath. There's always volatility that follows, so there's no need to try and guess on really the move that the Fed creates. You can just play the aftermath, and that's really, if you want trading to be a sustainable income for you, you can't be YOLOing. You can't be just placing bets all the time. It needs to be consistent profitability. So the way you do that, you can't make these bets. You can play the aftermath of these massive moves. Nothing goes up forever, nothing goes down forever. So you can catch these pullbacks, you can catch these just these relief breaths, but you really do not need to bet on the first major move. There's moves that come after. So um, from here, if we can't hold support, so support is currently sitting at yeah. So it's that blue square right here. That blue square. It's kind of a $1 range from 399.60 or 70 to 398.30. If you can't hold that region, it's not looking great. If that doesn't hold, we can go much lower. I can easily see the potential for getting back into this consolidation zone and kind of seeing what buyers and sellers want to do from there. So if we don't hold this pullback, there's a lot of downside. If you do hold this pullback, we can rip to the skies. So it's a very interesting area. I think the FOMC numbers are going to have quite an effect on what the market does from here. So we could see some sideways action till then. And yeah, other than that, I don't have too much to say. So we're just going to have to wait on those numbers. And we'll just play that aftermath. So make sure to join the Discord. We're running that lifetime deal in there. There won't be a for long. There's limited spots, so make sure you can get in while you can. And other than that, make sure to share the video some love if you watched the whole thing through. Give it a like and subscribe, and peace out, guys.